Hi, IBD. I'm Meredith Heyman. This is IBD Explains. Thanks so much for joining me. Is a shakeup in the Fed heading our way? President Trump has threatened to oust Federal Reserve Chief Jerome Powell. And if the central bank transitions to new leadership, what will this mean for Fed policies and the stock market? Joining me to discuss is IBD News editor and economy expert Ed Carson. Ed, thanks so much for being here.
Thank you for having me.
It's our newest edition of Ed on the Fed. I don't know how it's taken us this long to get there.
We could have Jed on the Fed too, our economics reporter. So we're set for the puns and the alliteration.
Embarrassment of riches. Absolutely. All right, let's get into it. So, President Trump has criticized Fed Chief Powell for being too late to cut rates. He's reportedly threatened to fire Powell, but has walked that back in recent weeks. Could Trump realistically fire Powell? And if so, how might the stock market and the bond market react?
It's unclear if President Trump could fire Powell, at least just straight ahead. The Supreme Court issued a ruling that implied that maybe that Trump couldn't fire the Federal Reserve chief just at will. He would have to have for some cause. And there's been some some of Trump's allies have talked about, the cost of renovating the building. But that honestly, I think most people see that as a sort of a pretext. It's like giving Trump an excuse. I don't know if he would try to use that. But if that did happen, if he did fire Powell, that would probably have some dislocations in the stock and bond market and other financial markets as people worry about the Fed losing independence and just uncertainty about what would happen.
Now, what's the historical precedent for a potential Fed firing? How has the market reacted in the past?
We don't really have a good precedent. I think President Nixon in 1972 pressured the Fed chairman to make some cuts, but there was no firing. In 1979, the Fed chief Miller was moved from the Fed to become the Treasury Secretary of President Carter. So it's not clear if that was a promotion, a sideways, how you would view it. And in any case, Miller's replaced by Paul Volcker, who was seen as somebody who was going to be very serious about inflation. So nobody was worried per se that inflation was going to get out of control. I think the concern here is that President Trump wants rates to be cut, and not just a little, but by a lot. And so that could be raising concern. So there's not a lot of precedent, honestly, in this particular scenario.
So, would firing Fed Chief Powell, whose term ends next spring, muddy financial markets and raise concern about the Fed's independence?
I think it definitely would. I mean, like we saw when there was a report, which Trump quickly denied, but there was a report that Trump supposedly was saying, I'm very close to doing, I'm going to do it soon, and then he denied it. The market quickly sold off, and I don't think that the market was fully aware of what the rumor was by the time Trump denied it. I think that if that had continued, and that was just a report, not an actual thing, I think the speculation would be that the next Fed chief would try to push lower rates because it'd be a Trump nominee on the short end, but that wouldn't necessarily help on the long end. If you feel like the Fed is not going to control inflation, you would see maybe the long end rise substantially. If you're thinking, we lower rates, that'll make housing more affordable. It's like, well, maybe not. It could make it more expensive. We actually saw this last fall, and nobody was worried about the Fed losing independence, but the Fed cut interest rates pretty aggressively, and then variety of reasons, but the 10-year Treasury yield spiked over the next few months. So there's a variety of factors, but clearly the Fed cutting short-term rates was a factor. So that would be something. And if the long-term rates spiked, that would probably have a real negative impact on the stock market as well.
Now, what would a Fed shakeup mean for central bank policies around potential rate cuts and finding that neutral Fed rate?
The Fed chief, it would have to be approved, and that would probably be approved relatively quickly, especially if there's an ouster, or if it's just next May. It could be, let's just say, Powell's term runs out, and there's a new Fed chief. That chairman will probably, will have an influence, and you'll probably see short-term rates come down. There is an argument already, and honestly, by next May, I think markets expect rates to come down a little bit. I think there's still a lot of influx. The Fed's nervous about how tariffs will shake out for things, but maybe by then they'll have cut. But in any case, you might see that in the short run, but they don't have to. If the rest of the Fed policymakers feel like they're losing their independence, and if they feel like the markets are afraid, they may not go along with what the Fed chief says, especially if they want to be aggressive. I want to cut interest rates by 200 basis points. They're going to say, no way, we're leaving where it is. So it's unclear how that would go. If all this made people feel like inflation was getting higher, then inflation expectations got up, the neutral rate might start rising, which would also limit how much we cut. The neutral rate being the rate where the Fed is neither helping or hurting the economy, helping or hurting inflation. So if you do that, if that rate goes up, then that leaves less room for the Fed to cut without becoming really stimulative to the economy once again.
And are there any further implications for the stock market and investors to know?
Well, one possible policy thing, especially if a new Fed chief comes in and the rest of the Fed says, we're not really going to go along with this. We're not going to cut rates much. And Trump could, in theory, try to fire the board of governors. There's 5 sitting members of the board of governors. And so that would be run into the same issues. Could he fire those governors without cause? It's not clear, but he could try to do that, because then you could overhaul. Then there'd be enough that he could probably really pack the court, as it were, pack the Fed, and may get what he wants. That would obviously raise a lot of concerns as well about independence. And there is all crazy little scenarios that normally when a Fed chief's term ends and they aren't renewed as Fed chief, they step down. But in theory, Powell is also a Fed governor. He could stay as a Fed governor for years if he so chose. He probably wouldn't, because that would seem maybe as too antagonistic, but that is a crazy little scenario out there. While I'm speculating here, the market will decide. I just want to make it clear, if the market, whether it's a firing or just a replacement, depending on who is chosen, and he may just pick somebody who wants to cut rates a little bit, and that would be probably fine. But it's like the market will say whether or not the Fed changes that come over the next 9 months or so are positive or negative or not a big deal. So I mean, this is me just spouting here. If the market gets really positive because of changes, hey, that's something that investors that's what they have to respond to, not what some talking head said 6 months earlier.
And preparing more for that, how should investors react to possible market volatility following a shakeup if we see one?
Yeah, it's just how much risk you want to do. We talk about Fed meetings and there's going to be gyrations. You don't know how it'll go, and you don't know. Markets may sell off, but then they could quickly rebound, or they might sell off thinking, oh, but it's not going to be too bad because things will calm down. And it's like, no, it's actually going to be worse. So you don't know how you do. You have to rely on like, if the market starts showing weakness beyond regardless of what the news, if the market is showing real weakness, you need to be pulling back. If your stocks are showing weakness, you need to be pulling back. If the market finds key support or quickly rebounds, you have to respond to that. Ultimately, we talk about a lot at IBD. It's not the news, it's which I hate to say as news editor, but it's not the news, it's the reaction to the news. And so I think ultimately, yes, you should be aware of all these things and aware of potential scenarios, but you should be, ultimately take your cue from what the market is actually doing.
All right, Ed. Well, we'll be watching. Thanks so much for joining me. This is IBD Explains. I'm Meredith Heyman. Stay right here on IBD for more. We'll see you next time.